Hello and welcome as we are now entering into the 19th day of October 2020. My name is Derek. This is the Money Charts channel, all bets, trades, and of the like within each his own risk and their own reward. And I normally don't go over markets like the base index stocks, this being the Dow Industrial Average. And let me know if there is any interest within the comments. And I know it's going to be two ways of finding it. One, subscriber feed. And a lot of them are going to be are obviously interested in the charts I mainly cover, that of cryptocurrencies and or precious metals, gold or silver, and silver, whatever. And then if you found this via a search, let me know. And I mean, it's something I probably won't continue to show, but one of the reasons I still could do these charts is because I do things a lot differently, show it differently. And the 18 average, which I use, showing the highest and lowest prices, is my favorite indicator. Also using the mathematical Fibonacci exponential, which is not calculated too much by that many people. Most autumn programs calculate it linear on a linear level. So because of that, not many people show it. That's why I pretty much still do in a lot of these videos as it is. All right then, so the Dow on multiple time frames. We have a situation here where from this low, we have had some higher highs and higher lows within the market. And on the breakout in here, we had this nice correctionary phase, leaving the 18 average where weak resistance would come into play, and sure enough, it wasn't. And then another leg higher to this level, supporting where we came from. A little bit of a breakout here, and I like how we've seen the support. This is something to be like a buy now situation. Put a stop maybe down below this level, and it looks like this thing is going to ride above it. Now, of course, you're going to want to look at multiple time frames, do things on the other time frames support such a situation, and let's go ahead and see. Let's change it up. We'll go over at the 1 minute. We'll move all the way up to every single one of these time frames. So next up within the 5, what do we see? Well, there's a gap open right in here, and this is set for the futures index, so it's going to show it at all times whenever the market's moving. So this is the Sunday night gap open, 1800 hours New York time. As I'm doing this, it's Sunday night, the 18th day at 8:30 p.m. Eastern time. And so within the move, we were in a downtrend. So one thing we could do is just quickly calculate some Fibonacci, say from this high to this low, and just see where the numbers go in. So what I do is I take the highest number, divide it by the low, and whether you do this on this one here, if you do this exponential linear, you'll get the exact same numbers when the volatility is like nothing, which it is here. The higher the volatility go, the more the numbers will change, and the more I like the exponential. So it works either way when I do it this calculation. So high divided by low to the exponent of, I'm going to be looking at 0.382 and 0.618. So those two ones, and then multiply the low again. And as it goes right now, it is looking to show a good breakout pattern. This is giving me more precedence for why I think you would want to be long on a situation like this if you ever see something in the spot. Again, you could decide, okay, do I put a stop below this line in here, maybe below the key fib point in here, below the 18 average of lows, but it's breaking it very nicely as it is above the 18 average of highs. And resisted it, of course, with a pierce below at 1815 and piercing extra at 1940. And the breakout holding it as support for like 6 periods in a row. Really, this one is the 7th, but now it's at highs not seen, going back to this period here, October 16th and the 15 3/4 stamp. So does this mean anything more? We look at the 15 and 15 minute time frame. Well, this is just like a small intra move of what has already been in a bull market, which is something you want to keep, something you want to make sure you have is a bull market behind it. Makes it very good to think, okay, the chances of like a long position working here coming up to this level, or a trade you'd see for the short term there, works out pretty good. You're also seeing, just even on this time frame, okay, we've had a situation where we consolidated within this 18 for a decent amount of time. Now it got escaped out above the 18 on the 20-hour stamp. Previous one, it held and stayed above it, and it's doing it so far. It is already, there's 644 left in the 15, so past the halfway point of this one as well. That's relatively productive in itself on the single hour term time frame, we can see that we probably want to consider adjusting Fibonacci soon from whatever this low happens to be, but we're still looking from this move to this move. And it really does need to get out and hold above this level for me to state that this bull run from the low to the high is ready to get back going again. It would also make a move above the highs, which is really what I need to see within it, because if this selling is real, it's not like I haven't seen it before where we have the move goes down, establishes a low, then from the high to the low it rallies about 64% or something, and then it just goes back down again. I mean, that can easily happen too as well. And it is a situation where it could be both bullish and bearish to make a move towards up towards the 28,726 level. But in a situation like this, I see a spot where if I see, like for example, back in here, it comes down the 18 lows, but it never ever really broke below it. Now it comes back down the lows. It actually goes well below it, but so far, the last two periods before and the current one holding and staying, and it's above the 18 average of lows. So therefore, I know it's correcting within it. If I see this thing starts to falter, bringing weakness, I can adjust Fibonacci from this low to whatever this high right now in here happens to be. I see weakness below whatever the 61.8% down move is. Then I realize that this thing is probably going to break down and go down to work about here at least. And then do a 61.8% Fib correction from this high to this low. All right, 4 hour term time frame in here. We've had how many of these higher lows? 1, 2, 3, and then this whole run of just finding like all these little lows at the 18 of highs. So very, very good run that it has had thus far. And the correctionary move from this high has had a little bit of selling, but so far so good within it and escaping it on here. If you see this thing breaking out, and if it's holding and staying today above, well, really above this level of resistance in here, or on the Dow futures numbers 12,85551. Or the one that goes all the time anyway. I mean, I don't trade this stuff. It's just I trade cryptocurrencies and stuff, but I do enjoy reading charts and such. Which again is why I'm asking the question if there's anyone who really cares for this, because I personally don't. But as far as just reading what goes on in here, pretty cool things. I'm going to remove the Fibonacci now. Don't really need it. Find it. See, I can already tell by doing Fib from key points, like say from. Ooh, didn't want to put the colors in. We get the right thing that I need. Okay. From this high to this low, I know that there's about a 61.8% somewhere around here. And it's already violated it. So it's telling me that this selling from in here is a failure. Because I'm seeing it hold and stay above here for a significant period of time. So now the likelihood tells me that we probably won't see anything down here anytime too soon, and we will most likely break this high and extend this a little bit further. And when we look at this on the weekly, wow, I mean, it's right at the previous high. Now, if you compare this to things like, gold and silver have just crushed their pre-year-to-date highs, pre-early year highs. And late 2019. This one's got to the matching level, but it is as it is, and we really did have our first test of this high in here, successfully correcting as it seems right now within the 18 lows. How we're seeing this play within the highs right now is giving me reason why this is probably going to be in time ready to break above these highs and basically be making that of new all-time highs. I'm not going to switch this up to the regular Dow because I'm going to go to monthly time frame. And this gives me more data. It's an inflationary market with the Federal Reserve and all countries, same ordeal, creating fiat currency through a debt-based system on the banking loan and interest rates, all those kinds of things that go with it, and thus everything priced in dollars, yens, and pounds, and what else you may have. Well, it goes up in price. That's Price is increasing is a symptom of inflation. So we had a very good correctionary phase throughout the middle part of the previous decade, as it was in just a long uptrend. It stopped in 2015, but it got out of it around 2017. So for a couple years in here, doing all of this. And then from that point on, beautiful up move, but we've had more correctionary phases in the time, because we reached this high, and it pretty much has been in this sideways range as well since September 2017-ish or so. 3 years. And when we look at the sell-offs, we have this one, a little bit in here. I'm not going to do whatever this one, and definitely on the whatever this. So these ones in here, a couple, they come back, the quick moves, come back, the quick moves. They're the quick move. And the rate, and this one here, this V1 here, and why this just keeps coming up like that, I don't know, but the volatility tells you, okay, the next thing that happens here is going to be huge. At least that's what it's telling me. To me, if I see a situation where something goes up like this, has its time correction, markets correct either that of price and or time. And even though there's still a bit of price in here, this was mainly a time one. And again, we got time with an extra big ordeal of price in here. I mean, we did have an uptrend here, but you know what, for what it's worth, this was like a failed breakout attempt, and now it's showing that it's holding and staying above this level like it did before. Again, within this V-shaped formation, at breaking out above this, we should have a significant move, breaking higher. And, well, could it be a melt-up in the sense of, oh, we got like inflation that brings us to who knows large events? Maybe, but the selling here obviously got rejected. We look at this even further. We can see in here that we had another long sideways correction during this time frame. This was basically the first decade of the millennium. Yeah, prices had your Y2K, well, Microsoft tech bubble, that's what I was looking for, tech fall, and then piercing above previous high. There's the pierce above, retest of previous low with the 2008 meltdown in the global situation. But hey, we had the Feds and all these people do the things they needed to do to ensure, well, this happened. And yeah, retest of it. And as it was holding and staying above, and you broke the key level of resistance, significant move. And the significant move has been this. And it looks like the significant move isn't over, with this being, okay, maybe this will be start of a new key level. You talk about this low to this high to this low and to whatever this large price might come into play at. But this is in a monster uptrend overall. When we look back at this to from 1900. 120 years, well before any of us has been born. So up move, and then the 1929 crash. So we talk about all previous crashes this market has had. Well, 1929 is the biggest down move it's had when we look at this on a logarithmic scale from here to here. If we lose, that was 388 to 50. So if we lose 7-8 times from here, that'd be 4,000-ish or so. And then if it goes up to 60,000, it loses that. It would go to 8,000. I don't know if it loses that much again. And who knows how much this could have the potential to go up to. But a lot of this, again, is just going to keep going higher because of the long term. Because we have fiat currency losing its value. So within the retracement mode from this low to this high, I mean, you got a 61.8%. So right now the downtrend hasn't been destroyed yet. But now we got Fibonacci or retracement from here to here, and all it does is retrace to this point. And when you see it makes this higher low, and then it comes back and it does something like this. You do the 61 hit, have any type of successful correction, come back to this previous high and stay there for a while. And then this happens. Then the silent crash this is a spot where there's a lot of inflation, yet the stock market just didn't go down. It didn't go up either. The big move up, sideways, and right now it's in a current move up right now. So you can say, oh, this was way overextended in here. Yeah, it was at 2,200. But it was also way overextended at 10,000 was all said and done. And you can say, oh, it's way overextended at 28,000. Yeah, you can say it's overextended at 78,000 or 92. And that's if it gets there. Because this is we've had some wild moves, of course, within it. When I do think there's going to come a time, deflationary, inflationary period where people do panic within the economy sucking so bad that the market goes down. But if the major players of the stock game are not them, then, well, I know they are. They're not the major players, but they are the retirement accounts and so much other stuff like that. That you would probably see that it'd be just like in here, any move like this where you just get a big type of fall down because, well, they try to get you to sell for the cheapest that you possibly can. And that is probably going to be another V-shaped formation and then recover and make new highs eventually thereafter that in a melt-up spot. Because as long as they keep on just creating these fiat digital notes and just putting them, and more people figuring out the scam. And you know what? Magic isn't magic anymore, and things always change when things are figured out. And when we look back at everything pre-2008, 2005, this was a situation where if you try to talk about like a debt-based fiat currency system, how it's made, how technically all the currency in your bank is literally not your cash, it is the bank's. It is your accounts receivable note, and it is an asset, but it's not your cash until you ask for it, which can be done, of course, through like bank machines. You can buy gifts in the store. You can buy items at stores and whatever services. And you can go to the bank itself and get your paper rectangles and such like that as well. But yeah, people are learning more and more about that. And a lot of people, I don't think, like the fact that the debt-based systems works in such the way. And like, for example, you have, say, 50 grand in your bank. Well, no, you have accounts receivable, 50,000. And that could be a situation where maybe you don't get it because you might ask for it one day and there could be bank run spots. It's all could be's. But for me, I look at it as it is what it is. And until it changes, it will still be that way. And it's a matter of time before it will, but how much time it takes, 5 years, 10 years, 20 years? Well, I've been waiting for 13 years almost now for this currency to really have its final blows. And some people have been waiting for much, much longer. In fact, within the silver price, one of the reasons the Hunt brothers, as they have famously known, back in the 1970s, was buying up the silver was because they realized that the system was ready to go. So the fact that I've been waiting for about 13 years, there's been people waiting for, well, at least longer than 13 as it is for the same thing. People in here talking about this, oh, how cheap silver was, and it was. But the fact that, again, I know I've been doing the stock market, the fact that silver is at the 1980 highs, had this type of down correction, only made a rally from like to this spot and had to go through this. And well, that tells me that like people talk about, oh, it's been price manipulated. Yeah, here's yeah, you're right, there has been. And such, I look at it within silver, like trying to keep like trying to stop like any force against like a tidal wave. If you got lots of power, maybe you can hold it up for a while, or stopping wave, stuff like that. I'll try to explain something. It's tough to explain, but I believe because of the fact that it has been suppressed, that the price of this is going to explode big when it breaks this resistance. And that's why this is my favorite and largest holding. I don't own stocks. I probably will in time, but I don't see it happening. I need like what prices to go down for it. But more importantly, will stocks ever go on the blockchain? Like I can put my Bitcoin and my Ethereum and such. I don't got Ethereum though. But I have Bitcoin and it's on my hardware wallet and other cryptocurrencies. And gold and silver, I got them in like drawers and safes in different places, and maybe under the bed, maybe not different little spots. But stocks, I mean, I have to have it on like an account. And I've done this whole account system as far as like the whole the gambling part, if you will, pretty much my whole life, at least since the internet begun. I first deposited into an online account of some sort. It was Sports Interaction back in the year 2000. I deposited, I think, like $50 or something. I actually literally wrote a check and I mailed it to them, to Quebec province. A check with my signature, all that type of fun stuff. And well, that's just the way 2000. I don't know when the last time I wrote a check. I really, really don't know that I think about that. But anyway, back then that's what I did. And I just always been used to balancing out accounts and or balances, whether it be different poker sites. Of course, now I play on DraftKings regularly and do very, very well there. And it's always about managing your bankroll. And cryptocurrencies, when I'm trading that, it's the same thing. I can have my funds on Binance or any of these exchanges, and I have some of them on there, but ever since being on there, I love the idea of being able to hold all my coins in a hardware wallet that nobody but myself has access to. And anytime I want to move them to somewhere and to the exchange to sell if I need be, which usually is the case, then I'll move them there. And it would be cool to be able to do that within stocks. And so if there's ever a time where I could go and buy like an Amazon or whatever, or even like an S&P or Dow Jones shares, then, I probably would consider such. But until any of those days come in, then I'd rather be holding cryptos, precious metals, and the paper rectangles, both in a digital format and accounts receivable. Accounts receivable, which I have a decent amount of all four. Decent enough amount of all four. Thank you for tuning in, and have yourself a great day. Bye-bye.